Let's talk about your favorite subject, money. But this time we're going to talk about the mortgage company process, the actual process, what goes into it, and what you can do to make sure that you get your claims paid faster and get your clients back to where they need to be. And let's do it right now in 3, 2, 1. What's up, advocates? Welcome back to another episode of the Commercial Claims Show. I'm your host, Vince Perri, owner and CEO of Elite Resolutions. And today, I want to get right into it and talk about the mortgage company process. Listen up, advocates. Whether you're a public adjuster, contractor, or an attorney, if you have a client that has suffered any kind of catastrophic loss, whether that be by fire or storm or just any catastrophic loss that requires your client to have to move out and incur ALE and loss of use coverage, you need to think about looking at Black Diamond Services. This is an incredible idea for a service that I think is extremely valuable, and I've actually personally used for my clients myself. Basically, what they do is they provide all of the necessary money that is needed to be done for the homeowner to go and move to another place, whether that be a hotel or another home or whatever it is. They basically bill through their insurance policy's loss of use coverage, and basically they provide financial assistance so that the insured never has to incur any out-of-pocket expenses. It's an amazing service. I love the people at Black Diamond Services, especially Millie Varela. If you just contact her and contact Black Diamond Services, I'm telling you, they're going to take care of your clients like you wouldn't believe. I personally have a client who suffered a fire damage and had to use their ALE coverage, and all we did was refer them to Black Diamond. Our clients did not have to come out of pocket a single penny. Black Diamond provided all of the financial money, and they provided the actual location for the homeowner to stay. Amazing service. Contact Black Diamond Services today so you could find out more information for yourself. I know everyone hates it. It's a complicated process. It drives you crazy. It takes you forever to get paid. It takes your clients forever to get paid. They have to send all this documentation. They have to send out a check and they never get it back, or they do get it back and they have to send contractors, and it's a giant mess. But it is what it is. It's something that we have to deal with. So for those of you that don't know about this process, I'm going to explain it. And for those of you that do know about this process, I'm going to explain it. I'm going to show you how we do it at Elite Resolutions and show you some different ways that you could handle it yourself at your firm as well. And probably this is a great video also, policyholders, and to show your policyholders to say, hey, look, listen, just to let you know, this is something that you're going to have to go through. This is something that's very common in the industry, and this is something that I want you to be prepared for. So let's get right into it. The mortgage company process. What happens? The first thing that happens when an insurance claim gets paid, whether it's an undisputed check, which is your initial check, or whether it's the final settlement check, or whatever it is, whenever an insurance company makes a payment to the policyholder, they are required by law to put the mortgage company process. Now, from what I remember, this didn't used to be required by law. When I first started back in the old ages in 2008, that wasn't a requirement. It was just made out to the policyholder, to the public adjusting firm, and that was that. Obviously, what ended up happening was people take the money. They don't do any of the really large repairs that they're supposed to do. Unfortunately, there's people out there that do that. So what they started doing is they started putting the mortgage company on there. And when you have a deck page, so just to keep you guys, the deck page should have the mortgage company on there. The first thing that you want to do is make sure that you have an understanding of who the mortgage company is and making sure that all the payments are up to date. It's something that we require from all of our adjusters when they go out to the property, that not only do they take a photo and get documentation of the deck page, but we want to confirm who the mortgage company is. We want to get that out of the way, because a lot of times the insurance company is going to ask, they're going to want to confirm who the mortgage company is. Hey, who's your mortgage company, so that when we make a payment on this claim, we know to put the right one. Because there's nothing worse than working an entire claim, waiting however long it takes for the check to be actually received, and it being the wrong mortgage company. Then they have to put a stop pay on that check, and you have to wait for another check to come with the proper mortgage company. Or you want to confirm also if the mortgage has been paid already. That happens too. If it's an older deck page and then 6 months later or whatever it is, the mortgage company has been paid off, or the mortgage has been all paid, you're going to want a certificate of completion. That's not what it's called. It's a satisfaction letter. I can't think of it right now, but you guys know what I'm talking about. You want a letter that from the mortgage company that says that this mortgage has indeed been paid, and you're going to have to show that to the insurance company, which is why it's better to get it out of your way from the beginning, because it happens even to us still. We get the check with the mortgage company, come to find out the mortgage has been paid, or the mortgage has been switched to a different mortgage company. We need to get the satisfaction of the switch and then the new letter of the mortgage company. Get all that stuff on the front end, guys. It'll at least shorten your time that much and not having to do it later or not getting the wrong check sent. So part of our questionnaire when we go to the insured and we sign up to claim is, who is your mortgage? Is it current? Are there any other mortgages on the property? Insurance company is going to ask anyway. Might as well get it out of your way. So make sure you get that information, the proper mortgage company, to make sure that it is current. So once the check comes in to the insured, to the mortgage company, and to the public adjuster. First thing I would advise is you tell the insured to contact the mortgage company. Let them know, hey, I just received an insurance check. What is the process that I have to follow? All mortgage companies kind of vary a little bit differently, but for the most part, you will have to, or one person will have to send the check to the mortgage company for the mortgage company to go ahead and endorse it. There's different ways that you could handle it. My advice is try not to endorse the check until you actually have the mortgage company endorse it. Sometimes mortgage companies prefer that it is endorsed by everyone when they endorse it. I'm not crazy about that, but it is what it is. If that's what they require, that's what they require. I would suggest you tell your client, or if you are a policyholder, that you send it FedEx. Send it FedEx so that you have a tracking number and you know when they receive it. And if you want to take it a step further, send a return envelope as well. Then hopefully they go ahead and they endorse it, they send it right back, and you're good to go. The one thing that you must provide to the mortgage company every single time is called an adjuster's worksheet. People are always like, well, what's an adjuster's worksheet? An adjuster's worksheet is the estimate that's put together by the insurance company, and it should match up. It has to match up. So if you have a check or a payment for $10,349, that estimate from the insurance company should match up to $10,349. They just need proof that an insurance claim was there. I don't know what they need it for, but they need it. They need proof that an insurance claim was there and that's what the estimate was, and so on and so forth. So you have to make sure that you send that by email or along with the check. Send it there because they're going to ask you for it anyway. So send the worksheet and send the check. Once that's done, hopefully they endorse it and they send it back. Now I say hopefully for a reason, right? We all know that it could be a real mission. So the magic number, they say, for what's called a monitored claim is $40,000. A monitored claim is basically they're going to want to make sure that you actually do the work. For something this large, if it's under $40,000, they don't consider that large enough most of the time. But for anything $40,000 or more, it's going to be a monitored claim. What's that mean? You're going to have to send the check out to the mortgage company, and they're going to send you documentation that you need to fill out. That documentation includes, we want to see a copy of the adjuster's worksheet. We want you to fill out this document that says you have a general contractor that you've hired. We want to know when the work is going to be completed. We want the license number of the general contractor, and there might be one more that I'm missing that I can't remember. All this stuff needs to be filled out and sent back to the mortgage company. Worst case scenario, they release the check in thirds. That sucks, I know, but it is what it is. They release the check in thirds so that you could pay that contractor the first third so that they could begin the work. When you need the second third, you reach out to the mortgage company and you tell them, and they release the second third. Before releasing the final third of the check, they will want to send an inspector out to inspect that the work has been done, or at least is mostly completed. Once they do that, then they release the rest of the money. You pay your contractor and you're good to go. So some workarounds, I guess, around that, I would say are, if you've already begun the repairs, then I would try to make sure that you get a person out there immediately. You want to get the inspection out there immediately. Once you get the inspector out there, by the mortgage company standards and policies, that means that's it. They're done. They could release the rest of the money. So I always try to tell my client, hey, if you've already begun repairs, if you've already stopped the damage from getting worse and that's good to go ahead and demand that they send out their person to inspect. Because again, according to their policies and procedures, once that inspection is done, they release the rest of the check. So that's an advice that I can give you. The other thing is, if you do decide to hire somebody else, or if you do decide to do the work yourself, again, that's still your money. And now I'm speaking to you, policyholder, homeowner. It's still your money. You need to call the mortgage company. You need to demand that, hey, I did the work myself. Okay, I don't care what this check says. I don't care how much it's for. I did the work myself. I want you to send your inspector out to come take a look at it. So don't worry about too much about sometimes how much it is. I might be getting a little bit too much detail, but that's a way that you could try to get your money and get it fast. But ultimately, it's a pain. It could be a pain, anything over $40,000. My advice to you, like I said, is get the work done as a policyholder and make sure that you get that inspection as soon as possible. Very, very important that you do that. Another option that you have, so that's the monitored claims, but if they're not monitored claims, they're usually a much faster process where all you have to do is provide the adjuster's worksheet and they will go ahead and endorse it and they will release it to you. Another question that I get a lot is, what if I don't have an adjuster's worksheet? So what happens sometimes here in Florida especially, or anywhere where there's an attorney involved, a release is signed. So there is no adjuster's worksheet. All it was basically a negotiation between your public adjuster and the insurance company, or your attorney and the insurance company, to an agreed amount. The release should act as an adjuster's worksheet. Now, sometimes they're going to give you stuff about it, but you have to make sure that, now I feel like I'm speaking more to homeowners, make sure that you go up the ladder, okay? Because again, you're speaking to somebody at a mortgage company, probably at an entry-level position, who's looking at the policies and the process and the steps that they have to take. If they don't have that adjuster's worksheet, they're going to tell you no. Well, you need to speak to a manager. You need to speak to somebody else who's experienced in this already and knows that, hey, there is no adjuster's worksheet because it was a negotiated amount. So therefore, that release, which matches the number that is on the check, should suffice and the check should be released. So that's the other thing I would tell you. Now, let me give some tips and tricks to public adjusters. First things first is, this is why it's very important, public adjusters, to make sure that you get a personal check or payment for your fee before this process starts. So more often than not, the insurance company will send a check to the public adjusting firm's office. And what we will do is we will contact the homeowner and say, hey, we've got your check. Please send us our fee. And then we will endorse your check and send it back to you. Just a word of advice, public adjusters. As soon as you release a check that's endorsed and you don't have payment in return, and they don't want to pay you, it could be tough. So beware of that. Always make sure, rule number one in this process of getting paid, do not give the homeowner, and sorry homeowner if you're still watching, this is just a requirement. It's the only leverage we have is our company name on the check. Do not give the homeowner the endorsed check until you receive your fee in return. So that's definitely step number one and the most important rule in this entire getting paid process. How we handle it is we handle it two ways. The first way that we handle it is we do send an invoice to the homeowner and tell them how much they owe us. They send us a check. I go to the bank. I get a signature guarantee. That's another advice for public adjusters. You're going to want to get a signature guarantee from your bank because the mortgage company may require it. Again, you don't want to not do it. Just have a normal signature on there and then the mortgage company sends it back and that's what they require. Go to your bank, get a signature guarantee, and once you receive the fee, go ahead and send it to them or take it to them or whatever you do. We use mail mainly. The other step that we use is there are payment systems now, okay? There are two that I'm aware of. One is called InkPay and one is called Surety. We use InkPay at the moment for most of our things, and basically it's pretty cool. Basically, you just upload the check onto the software and you endorse it digitally. It gets sent to the client to endorse it digitally, and then they send you a FedEx label so that you yourself, the PA firm, could mail it to the mortgage company, and then they deal with the mortgage company throughout the process. Sometimes it's good, sometimes it's bad. In all honesty, I'm always honest on this show. Monitored claims are still a pain. Even with some of these payment systems, they're still very difficult. I haven't used Surety. I don't know about them. But from what I've had, the issues that I've had is the monitored claims. Now, until that issue is resolved, I'll make a video and say, hey, it's been resolved. This is the way to go. But the majority of our checks do go through the InkPay process or any kind of payment system process because it could be simpler too. If there's no mortgage company on the check, it's the best way because you get the money directly deposited into your account. The client gets their fee or their portion directly deposited into their account, and we get our portion directly deposited into the account, and we can put the contractor, if there's a contractor involved from the beginning, we can put them as sort of like a signee so that they could get their funds deposited into their account. So it works great with that. But I would say, I know it sucks, but anything over $40,000, it's very difficult. My advice that I usually do is I leave it on the homeowner to deal with the mortgage company. If I notice that it's taking too long, because we will follow up, we have the personal check. I want to deposit it. We will follow up with the insured, with the homeowner. Hey, what's going on? How's the process going? Oh, they're giving me all this crap. Oh, they're not doing this. Oh, they're not doing that. And then we just basically, what I like to do is, let me talk to them. Dealing with the mortgage company is not that much different than dealing with the insurance company. You just have to let them know what the situation is and why maybe they're not doing what they're supposed to be doing. More often than not, I have found that when I get on the phone with the mortgage company, and I would recommend that you have to be on the line with the mortgagee, and they have to allow you permission to speak to the mortgage company. It's very simple. Do you allow me permission to do it? Yes, I do. And then you start talking. You let them know what's going on in the process. What I have found is more often than not, we get it resolved right there. They release the rest of the payment, or they send the person to inspect, and then everything gets paid from there and everything is done. I had a check once that I was waiting for like a year, and the client was very difficult to get a hold of. Long story short, I got on the phone with the mortgage company one time, resolved the entire situation. So I would recommend, if it's taking too long for you to get paid, get on the phone with the mortgage company and help them. I do know of other public adjusting firms that actually give a letter to the homeowner to authorize them to speak to the mortgage company, and then they deal with that process themselves. I think it's a great idea. I think it's fantastic. But just beware, it's just more of your time that it's going to be towards that as well. I mean, anybody watching this as a public adjuster knows it's already enough of a headache and enough of our time to just get the claim settled. But now to deal with the mortgage company on top of that, however, you may be able to resolve it much faster than the homeowner would. And then that's pretty much it. That's the mortgage company process. It's a pain. It is what it is. I understand why it's there. But I think if we could educate the mortgage companies a little bit more about what goes on here, especially educate the policyholders and let them know like this is something that could happen, and try to help them as much as you can throughout the process, I think you can get these resolved rather quickly. We don't usually have a personal check here for really longer than about 2 to 4 weeks before eventually we deposit it. I would recommend as a public adjuster, try to get your fee paid immediately. Maybe they have enough money in the account. Obviously, this is a large loss and they don't have $10,000, $20,000, $30,000 of your fee for you to deposit. You will have to wait. I would suggest if it's a nice fee like that though, go above and beyond and try to help them throughout that process. And that's it. That's the mortgage company process. I mean, it's probably not the video. I mean, maybe in the beginning I hyped it up like it's going to be, oh, I'm going to solve all your problems. I'm not. I'm just sort of telling you how we do it at Elite Resolutions, telling you some of the couple options that you can do and the best way that you could just sort of get it done. But ultimately, you know, I've got a stack of checks that I'm looking at over here, which sounds nice, but I always say a stack of checks is just paper until it's actually deposited into your account. So you have to get that process moving and get it going. And the best thing you could do is just go above and beyond as best you can so that you can get paid and the client can get paid. That's what we got, guys. Again, my name is Vince Perri. Make sure that you subscribe to this channel. Every Wednesday, we got something new. We got the ClaimsGate podcast as well. We're basically coming out with 2 videos a week. We're trying to get to 3 videos a week. So make sure you subscribe. Click the bell icon. I promise you anything that we come out is going to be as valuable as I can possibly make it so that you could actually enjoy it and learn something for your viewing pleasure. Go on commercialclaimsadvocate.com where you could buy this book, the only public adjuster handbook that's out there, and you can check out the #1 industry meetups that we have called Advocates United, where we all get together, all industry professionals, restoration, contractors, attorneys, and public adjusters. We get together, we talk shop. We always try to get the best speakers, anywhere from 2 to 4 speakers at every single event. We have really great loyal sponsors that sponsor the event. Thank you to you guys. And well, it's throughout the country, and we're just growing, and we're just going to have more and more and more. And then also, if you are a public adjuster or are looking for a place to work, or if you are a homeowner looking for a claim that you need to file, you can go on eliteresolutions.com. You can go ahead and put your information. If you want to come work for us, you could submit a resume. We'll send you an application, and we can see if you'd be a good part of our team. And that's what we got, guys. Again, Vince Perri, owner, CEO of Elite Resolutions and Commercial Claims Advocate. And I hope you enjoyed the show. We'll see you next week.